What is good, boys? Zoran Trades back with another banger. And today I've got a little bit of a controversial video for you guys. So, we've got Mr. TJR. I'm going to be showing you guys a few things. I'm going to be showing you guys his strategy, why most people actually tend to fail with it, some backtest results that I have comparing his strategy to a different strategy, and then just basically comparing it as a whole and why it's actually that. Not just, oh, I don't like this, I don't. It's actually, you can see little components inside of the strategy that are either missing or just not foolproof. And without further ado, boys, let's get into this. I saw a few complaints that my webcam was too big, so I'm gonna make sure that's just the right size. And let's go. So, let me just clear that shit out real quick. TJR right here. What is his strategy? Very, very simple. Throughout all the concepts that he teaches, his only denominating factor for his strategy is actually liquidity sweep and break of structure. But the problem isn't exactly that, right? Because what have we been taught? We've been told that in trading and just in life, but specifically in trading, simple and simple is good. We've been told that this is simple, this sounds simple, and simple is good, right? If you're coming into trading, this is beautiful, this sounds so nice. Oh, liquidity sweep, break of structure, bang, entry, woo, I'm ready. But no, that's actually not how it works. Trading and the markets are so much deeper than that. And TJR does know this too, right? But the problem with that is that he has an unclear checklist in his strategy. There are no conditions in his strategy, meaning if this happens, I'm looking for this. If this happens, I'm looking for that. His strategy is very discretionary and it doesn't have a way to grade his setups. So a checklist would look like something like this. Are we in discount? Is there a clean liquidity sweep? Is there an inverse fair value gap? Is the other side of the liquidity pool still intact? You know, those things are all yes or no questions in a checklist that have to be there, otherwise you won't take the trade. Where TJR doesn't see it like that. He's very focused on what price is doing right now, which if you have a lot of discretion and you have a lot of screen time, that can be beneficial for you, right? You can know what you're doing, you can filter out the good and the bad. But to someone who's learning, not being in tune with everything that's going on and having a clear checklist is ultimately just going to work outside of your favor. And that's what I'm getting back to with this simplicity. TJR knows that this isn't as simple as it is, right? He utilizes equilibrium. He also utilizes inverse fair value gaps. He utilizes a lot of concepts. He just doesn't have them as core building blocks inside his strategy. Excuse me. And that can be very, very confusing for a lot of new traders because you see him say, oh, okay, well, we've got 1 minute equilibrium and now we're doing it. But the actual building blocks of his strategy is only break of structure and break of structure liquidity sweep. So now you take a random break of structure liquidity sweep break of structure and you're like, why is my trade failing? And why is TJR's trade hitting? And that's because of the discretion that's involved. And ultimately, to learn a strategy and the way he's positioned as the guy for new traders to come to, such a discretionary strategy just very, very much isn't beneficial, right? And the last thing is there's no way of grading his setups or just the setups that his system takes at all, right? Because he doesn't need an SMT. He doesn't need a fair value gap to get inversed. And with his entry model, he enters off break of structure, right? Break of structure is very, very discretionary because in an inverse fair value gap, for example, which we're going to get into in more detail, either the gap inversed or it didn't. And there's only 1 or 2 gaps inside that manipulation leg, right? It's either that gap got inversed or it didn't. It's no, oh, I like the close on the, it's either it got inversed or it didn't. But break of structure is very discretionary because a low time frame high might not be that big and it might not be significant, but we now technically closed above it, right? And it's just very, very hard, especially as a newer trader, to really say, okay, is this a good break of structure? Is this a bad break of structure? But with an inverse fair value gap, either it inversed or it didn't. And no way of grading setups also doesn't allow you to really know when is your time to be aggressive within the markets and when is your time to be stepping back and when should you be risking more and when should you be risking less. These are all things that TJR's strategy lacks. And the last thing that it does, which I didn't write on this list because I'm going to show you guys, is he doesn't have a clear break-even point. And the fact that he trades high risk to reward, this does not work in his favor either. Now I'm going to compare this to somebody else's model, the PB model. Basically the same exact concept, right? Both ICT traders. I'm pretty sure PB Blake even learned a little bit of his things from TJR, whatever. But the difference is it's a clear checklist. It's a yes or no based system. Either, let me make sure my microphone's on. Well, yes, sir. Either it inversed or it didn't. Either the high got swept or it didn't. Either we consolidated or it didn't, right? These are all yes or no based systems that basically remove this discretion, right? You don't have to think and, oh, does this look good? Does this look... It's yes or no, right? Clear checklist. Did we sweep liquidity? Is it in the New York session? Is there an SMT? Was there a good displacement through the inverse fair value gap? These are all yes or no things, right? And if you don't see these things, you just don't enter your trade. And that just removes the discretion. And on top of that, the inverse fair value gap, which is what this entry is based off of rather than the break of structure, is so much less discretionary, as I say right here, right? Because both trades are the exact same idea. Liquidity sweep is the trade idea. Maybe both traders are taking a trade off of London high or London low. But instead of waiting for break of structure, they wait for an IFVG. With an IFVG, if you guys haven't seen my videos on IFVGs, you guys need to watch that shit right now. I'm going to put a little link here. With an IFVG, either the gap inversed or it didn't, right? Either we closed, either there's a gap, and either we closed through it or we didn't close through it. There's no, we closed through halfway, so I'm going to count it. Either it did or it didn't close. But break of structure, you can see good displacement above a small high, but that does not mean price just broke structure, right? And it's very hard to get statistics on that because oftentimes price isn't going to break structure before moving to the upside. And maybe the move to the upside is the break of structure that you were supposed to be in on already. And also just mechanically, the way inverse fair value gaps are set up, if price retraces a manipulation leg fair value gap, it's going to give you a good risk to reward, and it's a high likelihood that it's going to continue for a certain period of time. And it's, again, a yes or no situation, which for a new trader makes it a lot easier. And I'm going to just show you guys what this actually looks like and then some stats of the two systems. So, first I'm actually going to start with TJR's trade here. On the right, we can see he enters, and this is a trade that I copied from him, that I took from his stream, that he took, and was one of the trades that I also took backtesting, and this is exactly the trade he took. He waited for this low to get swept here. This is not a significant liquidity sweep, right? This sweep here is not going to bring about prices massive movements. And this here, this break of structure here, isn't something that allows for a good risk to reward, right? Because here, there's a high here. We already broke above it there. You could have gotten in there, could have gotten in anywhere. But the point is that the risk to reward to this draw, A, isn't there, and B, it's so discretionary, right? There's no clear liquidity sweep. His entry is very discretionary. Why didn't you get in there? Because I wanted to see it break above the high, and once it broke above the high, then I got in here, right? And okay, the trade played out for a bit, but the point was there was such a discretionary entry. Why did you get on this candle, not this candle, etc.? On top of that, this trade ends up being a full losing trade, right? Full stop loss hit. Why? Because we hit a significant high in the market, but did not adjust our stop loss to break even, which is something that TJR doesn't statistically and strategically do. He does sometimes, discretionarily again, but he doesn't have a rule saying at the nearest swing high or low, we're going to go break even. At this high or low, we're going to go break even. And that, again, for a newer trader learning how to trade is very problematic. And when I compare that to this trade, we have a clear liquidity sweep right here. Clean liquidity sweep. The move happens right after the liquidity sweep. If this consolidates and moves and comes resweeps in this, we don't take the trade because we take the trade after the clean liquidity sweep. The inverse fair value gap here allows us to have good risk to reward. Once this gap gets inversed, we're still within this range. We're still selling in discount of the range. We're not waiting for this high to get closed above here and then just buying in premium. Buying in discount, not selling in discount. We're not waiting for this high to get broken here so we can buy in premium. We're still buying in a discount or close to equilibrium. On top of that, this swing high here is a point where we suspect price might look for a reversal. So that is where we're going to go break even, right? And this here is going to just take off so many of our losses, because there's so many times where we're targeting a further high, but the high before that was enough to bring price about to reverse. And bang, what happens? We are protected. We've got a risk-free trade, and this is also so much better on your mental. And again, with the inverse fair value gap, here it didn't inverse, we don't get in. Here it inversed, we got in. It's a yes or no system. Once you identify the fair value gap, it's a yes or no. It's not, oh, I like the close inside of this. No, it's either it inversed or it didn't. And those are literally two comparisons taking very similar liquidity sweeps. You can see this is the same movement of price. I'm pretty sure it was the same movement of price. No, it actually wasn't. But completely different entries and completely different results. And here are some of the statistics. So I backtested both of these strategies for about 30 days. And here is what I found. So with the PB model, obviously you guys have to take this with a bit of grain of salt, because I currently trade the PB model. So the stats that I'm going to have trading it are naturally going to be a bit better because I'm used to it. But here I was able to achieve about a 70% win rate across 11.73 thirds of a trade. I had one break-even trade, and my account balance at the end of my backtesting was $104,000, $4,000 profit. As we can see here, I don't think did I have a losing trade? I must have had a losing trade somewhere. But these are ultimately very good statistics. And then when we go over here, pretty much inversed, right? 12.12 and 2/8 of a trade, negative $5,000, right? The percentage doesn't matter because I ultimately was taking the same risks. I didn't realize that one of them had 100K and one of them had a 50K balance. But I had a 20% win rate and I lost $5,000 or $4,500, which is almost exactly what I made on the other account. And this just actually goes to show that the lack of structure within the strategy actually almost always doesn't work in your favor. And unless you came up with this strategy and the combination of the strategy, it's going to be very hard for you to apply that in a way that's actually going to give you the results that you're desiring. So, to conclude, TJR is a good teacher, right? Like, I personally learned how to trade through TJR's bootcamp. It got me into trading. He's very entertaining, and he's just overall a good guy to help you get into trading. Like, trading is very hard, it's very boring, and when you have someone who's very entertaining and helps you, along that journey, it can be very motivating. And also his bootcamp is very easy to learn from. It helped me learn a lot of concepts individually, not applying them together, but individually. And that is ultimately a good thing. And TJR's strategy for someone who's really just getting into trading and actually isn't even worried about results, but rather just being involved with the market, feeling how to use contract sizes, etc. I guess his strategy isn't too bad, but it lacks clear guidelines, it lacks a checklist, and ultimately it's just not mechanically set up enough to be in tune with what the algorithm of the market is doing. And therefore, for people who are actually intermediate traders who are trying to see consistent results in the market, learning from TJR and applying his model is just very, very much not likely to give you the results that you're looking for as a trader. And ultimately, your discretion is going to be the thing that gives you the profitability in this, which is hard as a beginning trader because you would like a system that already has an edge and allows you to build your discretion on top of it rather than your entire edge being built around your discretion. And yeah, boys, that's about it from me today. Appreciate each and every single one of you guys who pops into these. And I just wanted to add, if TJR does see this video somehow, all love. Like, I don't hate, I love TJR. TJR is one of my favorite people. If I saw TJR, I'd probably start crying. But I just have to make this video because I feel like this would also be something that I would have benefited from seeing earlier on. And yeah, ultimately, no hate to TJR. All love, you my nigga. We're going to be boys one day. But hope this is helpful to you guys. Much love.